This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on March 13th, 2015. Our time is 8:46 Mountain. Radio show runs on 6:30 CHED in Edmonton, Alberta, Canada, 3 o'clock in the afternoon on a Sunday. If you ever miss a radio show, they are archived on Harold's two websites, HESradio.com and RareColoredDiamonds.com. You can connect with Harold at RareColoredDiamonds.com or call 1-800-432-1022. Harold's auction site is HSFineAuctions.com. And I should remind you, we have a podcast. As I mentioned on the last show, there's approximately 50 million people that listen to a podcast every week. We'll be happy for you to listen to our podcast on your portable device anywhere you go. Just have iTunes on your device. Type in the World Financial Report on Radio. We are there. We're portable. We go anywhere you do. As we start today's show, the U.S. debt limit needs to be raised by March the 16th. They have been told that it must be raised up or they will not be able to pay the bills. In February, the United States, they spent, obviously this is them going further into debt, negative $192 billion. You talk about what's happening in the United States. Food stamps, beneficiaries exceed 46 million for 40, you heard right, 40 straight months. And Egon von Greyer says, in the United States, for example, it took 200 years to increase the federal debt from 0 to 9 trillion, but since 2007, just before the financial crisis started, U.S. debt has more than doubled from 9 trillion to over 18 trillion. So in 8 years, Bernanke and Yellen have presided over the debt creation of more than 9 trillion than previously took place over the last 230 years in the United States. And they actually think that by 2020, the United States could be potentially in debt around $30 trillion. It's a stunning number, to say the least. And if interest rates go up to 5%, as we touched on our last show, you're looking at maybe the United States having to put out 30-40% of the money they bring in to pay interest alone. That's right, interest alone. Our featured diamond of the week from RareColoredDiamonds.com is a .45 carat pear-cut fancy intense blue ring. We advocate during the economic times that we live in hard assets, investing in gold, silver, and diamonds. Take a look at RareColoredDiamonds.com, our featured diamond of the week, a .45 carat pear-cut fancy intense blue ring, one of the most stunning rings you will ever see. And Harold, good news, we've talked about it for a while. Our gold bars are on the way.
Yes, they are. It's been amazing, but we've been talking for the last 2 months that we will be back into the gold business, and we are going to be able to offer our clients physical gold at spot prices with no commissions. We had to wait and work out our deal with the mines. We had to work our deal with the refineries and get our importer's license, and it looks like that's all coming to a head, and in perfect timing, because we anticipated that the gold market would fall off over the last few months, which it certainly has done. As we're taping the show right now, we're at 1150. However, we do believe that we will test the 1100 and possibly the $1,000 level, and by that point we want to be a major buyer of gold. So we got our first kilo of gold, 99.9 from the refinery. It's absolutely stunning. We're ecstatic about it, and we are going to change the gold business. And again, give our clients the opportunity to make a lot of money in the gold market and not pay these ridiculous and exorbitant spreads and commissions and financing fees and everything like that. You'll be able to take delivery of it. And if gold does go to 1,000, which I believe it will, you'll be in profits at $1,001. So we will not charge you any commissions or any spread whatsoever on these gold purchases. So we're ecstatic about that. It's been a tremendous project, and it's all coming to a head at this particular point. we've been saying that the gold market was going to continue to fall because of the strength of the U.S. dollar, and that's exactly what's happening at this particular point. We got the gold market trading at 1154. We have the silver market trading at 1561. So you've got that situation. By the way, platinum is now below the price of gold. If you remember, platinum was $200 to $300 above the price of gold. So in all reality, during this 3-year debacle where the gold market and silver markets and platinum markets have fallen off, gold went from 1900 to around 1150 that we're at right now. But silver dropped from 50 all the way down to 1450 that we saw a few months ago. So there's been much larger declines in other metals. The gold market has not dropped 50%. It's very similar to what happened back in the late 70s when the market was reacting very similar to what it's doing right now. But what we need to look at is oil, gold, and the Canadian and U.S. dollar. There's a direct correlation between gold and the U.S. dollar. We've known that forever. When we first started recommending gold about 13, 14, 15 years ago, gold was at $250 because the U.S. dollar was the strongest currency. When all of a sudden that changed and the U.S. dollar started to fall substantially after 9/11 and all the things that happened after that, and obviously 2007, 8, and 9, what we've now seen is a reversal of that. The gold market has dropped because the U.S. dollar has strengthened against other currency markets. So the direct correlation is definitely there. As we're looking right now, the U.S. dollar is almost at par. It's at 99.97. It's up 75 points on the day. So consequently, when the U.S. dollar goes up, the gold market will fall, and that's why we anticipate that the U.S. dollar will go stronger over the next couple months, which will bring down the price of gold to probably around $1,000. Now, a similar phenomenon is happening in the oil market with the Canadian dollar. The Canadian dollar has dropped substantially from being at par about a year ago to being down by about 25 to almost 30%. Because of the price of oil. So as oil prices have dropped substantially, and as we're trading right now, oil's down $1.50 at 45.56. We anticipate that the price of crude will fall further. I'm thinking the crude oil is going to drop into the $30 to $35 range, which could actually mean that the Canadian dollar is going to fall further because the Canadian dollar is directly priced into the price of oil. So as oil prices go lower over the short term, and this is not going to last much longer, but we do think we're going to see one final sellout in the price of crude that'll bring the Canadian dollar down probably another 5 or 6 cents. And that's going to be a situation to where we may see a great opportunity to buy the Canadian dollar at that point when the oil market looks like it's going to reverse and go higher. And there is absolutely no doubt in my mind that crude oil is going to bottom out and is going to go substantially higher. I do believe that we are going to see crude oil back up around $80 to $100 before you know it, which will strengthen the Canadian dollar and other currencies. So again, at this particular point, what we need to do is just bide our time. We don't get emotional about these markets. We're logical about them. We have no control over what the markets do, but we do know that when certain things happen in the market, there's going to be an action and a reaction. And again, what we see is that the Dow will continue to fall. It's down 130 points today. It's at 17,763. The Dow does not look strong at this point and should continue to fall, but we know that there's intervention and there's manipulation, and we're not going to see the Dow Jones fall tremendously at this point. It is going to fall. There's a very good chance that we could see a massive sell-off in the Dow. However, at this particular point, with the U.S. dollar strong, I think that the Dow is going to trade within this range for the next short while. The Canadian or the TSX will fall because the TSX is directly tied into commodities, and at this point commodities are weak. The TSX is down 118 points as we're taping the show. We're at 14,652, and as I mentioned before, crude is down $1.50 at 45.56. So nobody gets shocked or nobody gets scared or nervous. We anticipate that this will continue for the short term. So we think the crude oil will fall possibly another $10. Falls $10, the Canadian dollar is going to drop by another 3, 4, 5, 6 cents in that area, depending on how quick the drop comes. In the meantime, the U.S. dollar is going to continue to strengthen due to the fact that all other currencies, especially currencies that are tied into oil-producing nations, are falling. So it's not only the Canadian dollar that is in trouble at this point, so is the Russian currency, so is the Venezuelan currency, and any other oil-producing nation's currency has got to weaken at this point. And the reason that I say that oil is going to drop another $10 and then it's going to go back up to 80 to 100 is primarily because you're going to find that these oil-producing nations, especially the smaller ones, are not going to be able to continue to produce oil. And that's going to drop the price of oil substantially. But what's going to happen is that there's going to be less and less and less oil on the market, because if it costs $85 to produce a barrel of oil and they're only able to get $35 for it, there's just no way in the world that they're going to continue to do this. So, the way that I see things is that we're going to see some action in the markets for the next month or so. We think that gold will continue to fall. If it falls to 1,000, which coincides with the time that we're going to bring out a new amazing gold program to you, it's going to be a godsend. We're going to make a fortune back in the gold market again. I'm positive of it. I've traded gold, since 1979 and 80. I've studied gold. I've been in the commodity business for 35 years, and I've made some tremendous calls in the market because I understand these markets. I've traded them for, more than half of my life. So again, I'm not panicked in any way, shape, or form by what's happening in the market at this point. In fact, I'm looking forward to what's coming over the next 2 months, because it's going to give us opportunities to make a fortune of money, and that's what we need to do. We need to own everything physically. Don't leverage your gold. Don't finance your gold. Don't do anything like that. It doesn't make any sense to do so. Own it outright, and we're going to be able to bring that to you at the right time. You'll be able to buy gold physically from us. We'll ship it directly to you through Brinks, and the only fees that you will pay is your shipping charges, and that will be directly with the carrier. We're not going to charge you a commission. We're not going to charge you a spread. There will be no finance fees, no storage fees, no nothing. You're going to make a lot of money in gold again, and the time is coming very quickly. We're also going to make a lot of money in oil and in the currency markets when the times are right. I also want to touch on this fact. I've been talking about diamonds to our clients for the last 10 years. And I've always said one of the major reasons to own diamonds is because of currency devaluation. And my Canadian clients are finding this to be so true at this particular point, because even clients that bought diamonds last year when the Canadian and American dollars were at par, now that the Canadian dollar has, or the American dollar has increased by 25% over the over the Canadian dollar, meaning the U.S. dollar is stronger, what that has actually done is made our clients an extra 25% on their diamonds just on the currency. And that's what I've been talking to you about all this time, is why it's so important to own these type of assets, especially rare diamonds that are priced right now in U.S. dollars, but we can sell them at any time in British pounds or Japanese yens or whatever the strongest currencies are. Right now, the American dollar is a strong currency, and that's going to continue. The last thing in the world you want to do at this particular point is sell out of diamonds. Diamonds are the one asset that are the most stable. They're only going up in value. They're not dropping. And the other thing is that they're priced right now in American dollars. Means that my Canadian clients, even clients that bought a yellow flawless diamond last year for $20,000, when you convert that from American to Canadian, you've made $5,000 on the currency alone in 1 year. That's what I'm so proud about. The fact that we brought something to you that is conservative, but is going to turn out to be one of the best investments you have ever made. So between our physical gold program, between our diamond program, and our rough diamond business that's doubling our clients' monies in 4 years, we're bringing to our investors and our listeners opportunities to make conservative but strong money in a marketplace that is loaded with volatility and risk. So again, at this point here, Randy, I say that my company is totally regrouped, and in the last year, with all this debacle and all this currency devaluation and fear in the marketplace and volatility and manipulation and everything else that's happening, it's the opportunities that we're bringing to our clients that look to be the best opportunities in the investment markets today. So again, there's a lot of things happening, but a lot of good things happening. And if we just take our time and do this properly, we're not only going to make money, we're going to make a lot of money, and that's coming up very soon. So Randy, I'm just ecstatic at this point. We've got a lot of good programs happening right now.
RareColoredDiamonds.com. Harold brought colored diamonds to us back in August of 2005. He wrote a special report, and since that time he has been 100% accurate when it comes to instructing us. Our thesis is buy diamonds. Have some gold and silver in your portfolio, and he has been right. We offer the world's finest investment diamonds. This week's investment diamond from RareColoredDiamonds.com is a 0.45 carat pear-cut, fancy, intense blue diamond ring. And this is the type of diamond that you would find in a museum somewhere. It is absolutely stunning. See it at RareColoredDiamonds.com, featured diamond of the week. We have a free weekly newsletter. We send it out via email. If you'd like to receive it, we can send it out to you. It's a companion to our radio show, and it does have a picture of the diamond every week that we do feature. As I mentioned earlier, the United States needs to raise their debt limit up. I think they're right around 18 trillion, probably going to have to raise it up to around 20. They went in debt 192 billion last month. And there are some people who believe that the United States is in debt 200 trillion based on entitlements. And that is a Professor Lawrence Klotnikoff. Japan now spends 43% of tax revenue to fund interest on debt. And the reason I mention that is I've touched on before, the United States, if they raised interest rates based on the money that they owe, they would be paying out roughly 30% of what they bring in to pay the interest alone on that debt. And this ties into, and this was in last week's newsletter. We can send it out to you. I wanted to touch on it because we didn't get a chance to mention it last week, but U.S. debt and gold's return. Nick Barashev, he's the CEO of Bullion Management, claims that between 2000 and 2015, the U.S. debt and the gold price have had a positive correlation of 93.7%. However, since 2012, the relationship has decoupled. To get back to the correlation relationship, the gold price would have to return to around $1,800, implying right now that gold is undervalued at current levels based on what's happening in the United States when you take into account the debt that they continue to add on. They are probably going to be in debt again this year, the United States, around $500 billion, $500 billion. So obviously, once again, the United States, we're hearing a lot of things about how great things are, but if you look beyond the smoke in the mirrors, there are some serious situations. One thing I wanted to touch on is in our newsletter this week, Jim Rickards has an excellent article, 3 Catalysts for the Price of Gold. And he goes on, and I would really encourage you to read this article. It's a quick read and an easy read. And the 3 catalysts he believes that could affect us in the future are extreme deflation, which we're starting to see in the Euroland. They're fighting it, obviously, with negative interest rates. Financial panic, which we could see due to all the derivatives that are around the world. If anything goes wrong, we could have a complete bust-up. And negative real interest rates. And we have negative real interest rates around the world as we speak. And that's an article that is a must-read in our newsletter this week. It's from Jim Rickards. The 3 catalysts: extreme deflation, financial panic, and negative real interest rates. I know a lot of our listeners have Netflix. And I was watching, and this was recommended by a friend, Ross, to watch on Netflix. And this was from the PBS Frontline series, To Catch a Trader. And it's on Netflix. I highly recommend it. It's about 50 minutes long, so it's not too long to watch. But, Harold, it goes into all the skullduggery on Wall Street of people getting tips and making money on those tips. And it's amazing to see how things are so rigged. And they interviewed a man who invested in the stock market in good faith based on the fact that he thought that that the stock he was going to be investing in, it was a drug stock, was a good investment. And then it plunged on one day because they had a test of a drug and that test was not successful. Well, one of the companies that they featured was tipped off prior to this happening. A few days ahead of time, they were tipped off that the numbers were not going to be good coming out and the test had not gone well. They sold their position out. They shorted the stock. They made money on the upside and they made money on the downside, and it was all because of insider trading. And a lot of these people, the thing that's amazing, Harold, a lot of these people, some of them have been charged, but a lot of them have never, ever gone to jail. We have about 2 minutes left in this segment, and you've always said, be very careful with the stock market because the insiders, they know, they seem to know what cards are going to be coming up before the average everyday person, and it's a real shame. It's just not fair, but I encourage people to watch that, To Catch a Trader on Netflix.
You bet, Randy. It's really sickening to think that these are supposed to be free markets that you can go in, and they're important markets because they're not only used for speculation, they're used for retirement, they're used for hedging, they're used for so many different things, and to think that you cannot trust the markets. We know that we can't trust the commodity markets either, or the currency markets, because we know that they've been manipulated just by the fact that certain firms have been fined billions of dollars for manipulating currencies. We know the same thing is going to happen with metals soon because metals have been the most of all commodities, and then the stock market. We all know that that's happening, but most of the general public is not involved in stocks at this point. They just can't afford it anyway. So the market's down almost 200 points again today. The Dow is really looking weak, and again, if they let this market trade on its own volition, we'd be trading at 9,000 or 10,000.
In our newsletter this week from Zero Hedge, former SEC director admits the truth. The market is rigged. For more than a decade, John Ramsey kept his mouth shut about how rigged the U.S. equity market was. We have that article in our newsletter if you'd like to read it. It's a telling statement. Here's a guy who is no longer with the SEC and now coming out and saying the U.S. stock market is rigged. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Get our free weekly newsletter, the companion to our radio show. You can see all the articles that Harold and I are talking about on today's program. You can go through the newsletter in 5 to 10 minutes on a portable device, or you can spend hours if you want. rarecoloreddiamonds.com, or call Harold at 1-800-432-1022, 1-800-432-1022. And whatever you do, take a look at our featured diamond this week. It's a .45 carat pear-cut fancy intense blue ring, something that is a museum piece. You'll see it at rarecoloreddiamonds.com, featured diamond of the week. Going to come back and talk more about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping on March 13, 2015. Our time is 9:11. Mountain Radio Show runs on your favorite radio station, 630 CHED in Edmonton. Don't forget, the shows are archived. You can listen to them streaming anytime, HESradio.com or rarecoloreddiamonds.com. We have a podcast through iTunes. And go to iTunes, type in The World Financial Report on Radio. You will find us there. You can have the podcast come into your portable device and listen to us at your leisure every week. We have a free weekly newsletter we send out via email free of charge. If you would like to receive it, connect with Harold at rarecoloreddiamonds.com. You can speak personally and privately with Harold about investing in hard assets. Our thesis, you need to have an allocation of gold and silver and diamonds in the chaotic financial times and geopolitical times that we live in. Our featured diamond of the week from rarecoloreddiamonds.com. This is an absolute beauty. It's a .45 carat pear-cut fancy intense blue ring. Fancy intense blue ring. It's something that you would see in a museum. And I encourage you to take a look at it. You can see the picture of it in our newsletter or go online to rarecoloreddiamonds.com and take a look at Featured Diamond of the Week. We have a couple of stories this week in our newsletter. The most expensive colored diamonds in the world, an interesting read, and a wealth report shows colored diamonds are on the rise. We also have a catalog from Harold's company, Diamante Atelier, just an absolutely gorgeous catalog of diamond jewelry. Some of the most stunning diamond jewelry I have ever seen. We also have a report from Bain & Company, Diamonds, Timeless Gems in a Changing World. That is a report that is a must read. And Harold, just a stunning, like last week we had a beautiful diamond ring, and this week I think we topped it. Just another beautiful, beautiful ring.
Thank you very much. You know, the thing is that blue diamonds have gone up so substantially over the last 10 years. The vivid blue has actually, which has got the highest saturation, has actually gone up 1,000% in the last 10 years. Back in 2005, you could have bought one for about $200,000 a carat. Today, they're $2 million a carat, if you could ever possibly find one. Intense is the next highest saturated color under vivid and deep. So it's a phenomenal diamond ring. It's just around a half a carat. Pear shapes are very, very rare, and this one is so beautiful. Then we put it in a museum quality setting and put pink diamonds all around it. As you said, Randy, it's just one of the most beautiful diamond rings, and it's something that you could enjoy and then give back to us to sell in 5 or 10 years, or hand it down, to other members of your family, your kids or grandkids. I've mentioned many, many times that my wife's girlfriend inherited from her grandmother a 5-carat pink diamond ring. And evidently the story is that 50 years ago the grandmother bought it for $50,000. Today the diamond's worth $5 million. That's what we anticipate out of these rare diamonds over the long term. It's also important to understand that you don't buy a diamond and look to sell it in a few years. You just defeated the purpose of doing it. They're a long-term hold because they don't trade like stocks or commodities. They don't trade on an exchange. They basically are a very private investment, and as I outlined at the beginning of the show, they are very, very sensitive to the currency markets. So my Canadian clients that, let's say last year, bought a 1-carat yellow flawless diamond, let's say for $20,000. Just because of the currency market alone, where the American dollar has increased by 25% over the Canadian dollar, my clients have made 25% on the currency alone. That's how exciting it is to be dealing in the rare diamond market with us. On top of that, we own H. Siegel Fine Auctions, the only secondary market that resells these diamonds. So, again, a lot of great things are happening in the diamond market, but the more volatile the world markets become, the more the currency markets become a problem. That's why diamonds are so much more important. Because just look what happened in last month in Switzerland when they decided to increase their currency by 30% and drop the euro. Everybody who had their money in the euro lost 30% of their money within about a half an hour. Anybody who had their money in Swiss francs made 30% in an hour. That's not, even though that's a windfall if you have your money in Swiss francs, it's still a very, very dangerous situation. And if you don't have the type of assets that can hedge against those type of currency devaluations, you're going to find that you could wake up poor one day. And that's the last thing in the world that we want to happen because there's no need for it. All you need to do at this particular point is move some of your money that's at risk in paper assets and put some of it into a hard asset like a diamond. And my recommendation is to buy blues, pinks, and yellow flawless diamonds. They're the best investment you could make at this particular point. The fact is that the currencies affect them, and we anticipated that they would affect them, and it's making our investment even that much stronger. But hold on to these diamonds for the next 10 years because you're going to find that the money you're going to make in the next 10 years in diamonds is going to do better than any other investment that you have. And again, what is the risk in owning a diamond? They don't trade on the exchanges, so you don't ever get the moves that you get in stocks and commodities. You don't get plummeting diamond prices because there's hardly any of these available. How many blue diamonds are available like the one that's featured today? I can honestly say in the whole world, a handful of them, and that's basically it. So, again, investment-wise, it's one of the most important investments you could make. Profit-wise, they give you the opportunity to make a lot of money. And the Argyle pinks and the blue diamonds and the yellow flawlesses, priced in American dollars are just making fortunes, and we anticipate that will continue. On top of that, we also brought to you our gold deal. Again, we want our clients to own physical gold for the next 4 to 5 years, and we anticipate that we're going to see a run in gold not only back up to the 1,900 to 2,000 level, but it could go to 3, 4, and 5,000. But you want to own it outright. You don't want to finance it. You don't want to leverage it. You don't want to buy futures contracts. You want to own the outright gold. And we're going to make that available to you. We just got our first gold bar from our refinery. It's 99.9% gold. We got a kilo of gold being delivered to us on Monday, and it's supposed to be absolutely stunning. And we are so ecstatic because we worked extremely hard on this. We know the gold is going to run again. It's going to run very soon in the next few months, but we do anticipate the gold will continue to fall. So this should coincide with each other. The lows in gold, our new gold program coming out, you're going to be able to buy gold probably at around $1,000, and at $1,001 you're in profits. There is no commissions and there are no other fees except to deliver the gold to you, and that will be a deal between you and Brink. So again, we're doing everything in our power to make certain that the next major run-up in gold, that our Canadian clients are going to be available to buy it and to make an awful lot of money, and there's not going to be any ridiculous fees that you're going to be charged in which to do so. The other program that we bring to you is our business of rough diamonds. We've been in the rough diamond business for 3 generations now, going on 4. It's a family business that has done tremendously well. What I've done is brought it current into the 21st century, and I've allowed my clients to invest with us. We pay a very, very high rate of return. In fact, for a lot of people, they'd find it impossible to believe that we would be paying 24% a year U.S. However, every business that I've had over the last 20 to 30 years, my clients have been part of. They've helped me get started. They've been instrumental in the success of it, and I always give back and I always pay back. So when this deal became available and we became in a situation that we could include our clients into our rough diamond business, it's such a profitable business that we just decided to share the wealth. So our Canadian clients are making 24% a year U.S. on these investments. We're buying rough diamonds with your money. We've expanded our business. Our business has done tremendously well, and we've repaid our clients handsomely for it. If you lost money in any markets over the last several years, I can make your money back in 4 years. If you lost $100,000 trading gold and silver, I can make it back for you in a very short period of time in a very safe program. So again, we've certainly stepped up to the forefront, realizing what's happening in the world markets. Certain things are totally out of our control. We don't control the way any markets are traded. But once we see what's happening in the market and we can decipher what's happening and why it's happening, we can generally figure out a way to make money from that, and that's exactly what we're doing at this point. At this particular time, when money is so difficult to make and it's so risky to be in the paper assets, we have 3 investments that are doing tremendously well, and we want to make certain that our clients are involved in it if they can afford to do so. Now, investing in diamonds is not for everybody. In actual fact, in the United States, most people can't afford it. 75% of Americans are living paycheck to paycheck, and as Randy pointed out at the beginning of the show, the amount of Americans that are on food stamps are at record levels. However, the people that can afford it and can afford to make money at this point are doing so. And they're doing so in 3 different programs that we brought forward to our clients. So if you're interested in, number 1, preserving your capital, and number 2, making money and making a lot of money, get in contact with us. We'll show you how to make money in the rare diamond market. We'll show you how to make money in the gold market. And we'll show you how to make money in the rough diamond mining business. And that's the programs that we're bringing forward at this particular point. There's no doubt that an investment in an Argyle Pink is a no-brainer. And if you don't take advantage of it now, you will never, ever get a chance to do this again. And we could see 5 to 10 times return on our money over the next 5 to 10 years. We anticipate that will happen because the same thing happened with blue diamonds. Blue diamonds went up 1,000%. Pink diamonds are going to go up 1,000%. And the reason that pink diamonds will go up 1,000% is primarily because the mine that produces them is closing in 5 years. There will not be any more pink diamonds left, and the prices will go through the roof just like blue diamonds have done. So investment-wise, you can't do any better than what's happening in pink, Argyle diamonds, and moving forward, they look to be the best investment that you could possibly make. You can get involved starting in the $40,000 to $50,000 range. So again, unfortunately, it's not for everybody. Not everybody has $40,000 to $50,000 to get started in the diamond business. However, what you are going to see is that a $50,000 diamond today could be a $500,000 diamond in 10 years from now. So if you have investments that are worrisome for you, that are sitting in paper assets and stocks and they're not making you money, get in contact with us. I'll gladly sit down with you for as long as it takes and explain what these programs are and show you how you can make money. In a rough diamond business, you can make 24% a year for 2 years or for 4 years. In fact, many of our clients are so upset by what's happened in their retirement savings plans, and the fact is they have not made any money, that if you want, you could trade in our rough diamond program on a 4-year basis, and we will pay you 24% a year U.S. So even with the fact that you have to pay your taxes coming out of this fund, out of your retirement fund, you're still going to double your money in 4 years, and it's going to be in American dollars. So again, I'm very proud of this, Randy. Nobody is doing what we're doing in business at this particular point, and a lot of it is to do with the fact that our clients have been with us for the last 30, 35 years, and it's a way of paying back. So I'm ecstatic about the programs that we have. Rough Diamond program paying 24% a year U.S. We have our gold business, which is now coming up, where you're going to be able to buy gold at spot price with no commissions, and then our rare diamond business. There's no doubt what's happening in the pink market, and if you take advantage of it at this point, you're going to find you're going to make a ton of money over the next 5 to 10 years.
Featured diamond of the week, stunning ring. It's a 0.45 carat, pear cut, fancy, intense blue ring, and I would say to the ladies, go to rarecoloreddiamonds.com, click on Featured Diamond of the Week, and just envision that on your finger. But at the same time, know, yes, it's stunning. And when you walked in a room, everyone would definitely take a look at you and your ring. It is an amazing investment. Rarecoloreddiamonds.com, Featured Diamond of the Week, 0.45 carat, pear cut, fancy, intense blue ring. And when we talk about investing in diamonds, their value and rarity is recognized globally and can be sold in any currency. It's the easiest, safest, and most discreet way to have wealth, portable wealth in your pocket. It's not directly tied to a global market, which safeguards against market uncertainty. It's not tied to the stock market or anything. Less than 1% of all colored diamonds mined are considered investment grade. Colored diamonds are the most concentrated form of wealth in the world. No new mines producing fancy colored diamonds have been discovered. Colored diamond mines are shutting down without replacements. We know that is the case with the Argyle. A hard asset that diversifies your portfolio securely and is not affected by volatile market movements is something that's important today in anyone's personal portfolio. Based on diminishing world supply, experts predict dramatic price increases in the future. And remember, naturally fancy colored diamonds, rare colored diamonds, the price has never gone down in the past 30 years. And I would really encourage you to get the Diamante Atelier catalog for 2014 and 2015. Harold can send it out to you, some of the most stunning pieces of diamond jewelry on this planet. Also, we have that special report from Bain & Company, Timeless Gems in a Changing World. It's a PDF file report. You can go through it and take a look at what they're saying. It's an updated report. They're really indicating that no new mines are being found for diamonds, yet the wealth is growing in the Far East, India and China. And they're starting to, yes, they continue to buy gold and silver, but they're starting to buy diamonds as a form of wealth as well. And I really encourage you to take a look at that report. We also have 2 more reports, the most expensive colored diamonds in the world, and a wealth report showing colored diamonds on the rise. Harold, who knew 10 years ago when you brought us that very first report in August of 2005, naturally fancy colored diamonds, best kept secret, that this would turn out to be the investment of the past decade, because it is probably the best investment, without a doubt, that anyone could have made in the last 10 years.
I believe it's going to turn out to be that way, Randy. I truly do. I think that with everything that we saw coming in the currency markets and that type of thing, the diamonds to me were the avenue that you had to go to. And again, the one thing that it was missing, though, was a resale market. Stocks have Wall Street, commodities have the commodity exchanges, but diamonds never had that. And being that my background has always been in the trading business, what we did was built a trading platform that will trade diamonds. Now it's a business that's still being built. Nobody is selling off their Argyle pink diamonds now. That would be foolish. We bought them because the mine is going to close. So at this particular point, we have the next 5 or 6 years to continue to build our business. And the way that we're doing that is through charities. We are very connected with some of the top charities in the world, and we raise a lot of money for them using our own diamonds. When we do these charity events, I put up my own diamonds. And we put up our platform, our HES Fine Auction platform, and we conduct these amazing auctions. Now, the thing is that the reason that we do this is because we need to be introduced to wealthy enough people that can afford to buy our diamonds, and that's exactly what's going on at this point. We do have an auction coming up next week, but it's a private auction. It's for the Girl Scouts of America, and they've invited all their own people, and it's being very highly publicized all over the United States and throughout Europe, because the Girl Scouts of America are one of the biggest charities in the world. So this is what we do in order to increase our knowledge and our client base in order to be able to operate and to be able to sell our clients diamonds when the time comes down the road. But like every business, it's a business in progress. We need to build it. We need new clients. We need new opportunities, and that's exactly what we're doing. We're relentless when it comes to that. We have massive parties and events coming up over the next few months that are all charity related, strictly so we can build our client base. We took a little bit of a hit with the Canadian dollar because with our Canadian clients, and diamonds being priced in U.S. dollars, it adds 25% to the cost of a diamond. So what we needed to do is we needed to go out and find new clients, and that's exactly what we're doing. That coupled, the currency coupled with the fact that oil prices have dropped and layoffs are fairly heavy, especially up in Fort McMurray, again has caused us to go out and find new clients, and that's a great thing. So that's exactly what we're doing. We do have an auction coming up next week, but it's a private auction for the charity, and again, we will certainly update you as to how that's going to go. But all in all, we're just extremely pleased with what we've accomplished thus far and how the business is growing. All we ask is that you bear with us as we continue to build this business, because it will be in your best interest, especially with what's happening in the currency markets, where our clients have picked up 25% in the last year alone, just on the Canadian-American dollar spread.
Now, I know, Harold, you had hedged the Canadian dollar. You had a feeling this might happen, Canadian dollar going down in relation to the U.S. dollar. You had hedged the Canadian dollar. Can someone investing in a diamond still pay in Canadian dollars? I know you had made that offer in the past.
Yes, they definitely have, because we anticipate another 5 to 6 cent drop in the Canadian dollar due to the fact that we anticipate that oil prices are going to go lower. So for all of our Canadian friends, we do have diamonds that you can buy in Canadian dollars, and the only reason that we can do that is that we were smart enough to hedge the U.S.-Canadian dollar spread, and that's allowed us to be able to offer diamonds to our Canadian clients in Canadian dollars. If we didn't do that, our business would have been in trouble. There would be no doubt about that when the majority of your clients are from one area and that currency changes as it did, if we didn't know that this was happening, we would have been in trouble. Fortunately, we planned for this. We hedged the dollar, and it's turned out to be a tremendous trade for our clients. And again, that's what this is all about. Our company makes money when our clients make money. Do you realize that when you buy diamonds through my company and we sell that diamond for you, we only profit when you profit. We get 10% of the profit and you get the rest. So if we don't make money for our clients, we don't make money for ourselves either. And believe me, we do love to give to charity, and we do that very substantially, but we are a business that looks to make a profit for our clients and for ourselves, and that's why we're in business. Fortunately, we've been able to cover both, and the more volatile the market gets, the more it seems that our investments are doing better and better than the mainstream.
Featured Diamond of the Week from rarecoloreddiamonds.com. It's a 0.45 carat pear cut fancy intense blue ring. This is a ring you really have to see. It's in our free weekly newsletter. We can send it out to you via email. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022, and as well on Harold's website, rarecoloreddiamonds.com. Click on Featured Diamond of the Week. A couple of interesting notes here before we end today's show. Since the global financial bubble took off in earnest in 2000, it's sobering to reflect on the changes. In 2000, the U.S. workforce numbered around 153 million. The U.S. workforce in 2015 is roughly 148 million. A huge decline despite the fact that the population is significantly higher. In 2000, the median income was a little over $28,000. In 2015, the median income is slightly above $28,500, but in reality, real incomes have plunged because of massive money printing and inflation. That's why we advocate hard assets. Buy things that governments cannot print: gold, silver, and diamonds. The median price of a new home in that period has soared from $170,000 to $295,000. It's no wonder that rents are skyrocketing. Home affordability is beyond the reach of the average person. Strong housing numbers are primarily in the multifamily dwellings. The media hypes any strength in those numbers, but it really reflects the tragedy of generations suffering a dramatic fall in their standard of living. The statistics for much of the rest of the world are equally tragic. At the same time, the number of people not participating in the labor force has mushroomed. In 2000, the number was 78 million. Currently, it's approaching 93 million, and this is according to Robert Fitzwilson. Harold, we have about 2 minutes left in our show. You can see the average everyday person is not getting ahead, and this show is for the average everyday person. That's why we advocate hard assets.
You better believe it, Randy. Again, the markets are really crazy everywhere. Right now, the Dow is down 250 points. It's only been up one day this week. The currency markets are all over the place. The commodity markets are crazy. The oil markets are dropping. Again, these are times that if you don't know what you're doing, you could make a mistake that could affect you financially for a long, long time. We're suggesting to be conservative, but take a look at the programs that we're offering to you. They're conservative programs that are paying out high rates of return. So, again, we're certainly willing to sit down with our listeners to our show, explain what's going on, see how you can profit from it, and if it's right for you, we'd like you on board. If it's something that makes you uncomfortable, just simply take a pass. But all in all, I think we're doing a great job at this point, but the best is by far yet to come.
Now, Harold, people can call you on our featured Diamond of the Week. If they'd like to speak with you, they can connect with you at rarecoloreddiamonds.com or 1-800-432-1022. You'll be more than happy to speak to anyone on the phone.
You better believe it, Randy. I love speaking to clients, especially long-term listeners to the show. I've been on the radio now for over 30 years, and I have several of the same clients that listened to me 30 years ago.
Harold Siegel, thank you very much for your knowledge and another outstanding week and show.
Thank you very much. I wish everybody a wonderful weekend and a very profitable day.
Definitely take a look at our featured Diamond of the Week. It is one of the most stunning featured diamonds we have ever had. It's a 0.45 carat pear cut fancy intense blue ring. Go to rarecoloreddiamonds.com, click on Featured Diamond of the Week. You can see it in our free weekly newsletter. Get our newsletter from Harold at rarecoloreddiamonds.com or call 1-800-432-1022. 1-800-432-1022. And don't forget, if you would like to see Harold on Fox Business or Bloomberg TV or his interview on the Jerry Bovino Show, we'll be happy to send those interviews out to you as well. Connect with us at rarecoloreddiamonds.com or 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.